So what is your assessment of the Chinese economy right now? Obviously, Ping An Insurance has life insurance policies, which are a key part of your business, but also investment returns. And the first part of the year has been a bit of a dip, and your net income was down about 23%. But you feel that profitability will pick up. How is that going to happen in this current environment here in China?
Well, Steve, it's great to be here. If you look at the Ping An Group is one of the largest and prominent financial institutions in China and globally. And of course, our earning capabilities are actually highly linked with the Chinese economy. But when we look at the Chinese economy, we cannot just take a time cut from one here and there. We have to look at things and put things into perspectives. Look at the historical growth models and look at how it can move forward. So we do have strong belief that the economy is going to regain its growth momentum moving forward. However, the quality of the growth will be much higher than what we had experienced before. And if you look at the whole things, we do believe economies go in cycles, right? And with the size of this economy, we could have big and small turns. We could have, sharp turns as well. The question is, how do we navigate through the different cycles, and how do we regain from some of the downs, and when we go up, we can become healthier. And I think this is something that the government is working on, the whole business community is working on. The Ping An is certainly trying to put our efforts into helping the growth of the economy to back on track and in a much higher quality.
How about new business value? Essentially, of the profitability of new life insurance policies rose 21% in the first quarter, followed by 36% jump in 2023. Can this be sustained, I guess, is the overarching question.
Right. If you look at the life insurance industry in China, if you look at the depth, the penetration, you look whatever numbers, ratios you look at, and comparing to what's happening in the more developed markets, like US, Europe, or even Taiwan, Hong Kong, and you will see there's very strong growth potential for Chinese life insurance industry moving forward. So we do believe this is a very strong growth opportunity for us. And Ping An being one of the largest and prominent life insurers in China, and we do believe we are able to take good advantage of that growth opportunity, right? So you do see our value of new business being going up, our productivity of our life agents being going up, and also more importantly, their average income for the life agency is actually going up as well, which is very important to keep the agents at very high quality and a stable pace. So moving forward, we do have a good sense that our business is going to continue to grow strong and moving forward.
I know you say you don't want to look at necessarily one sliver of time, but the first part of this year, in particular January and into February, obviously the stock market was really sluggish, and you had those low bond yields. It really eroded your investment returns. Yeah. How are you rejigging your portfolio to make sure that you're not consistently pressured on the investment returns that investors want?
Right. It's actually it's very important, the investment returns for our life insurance business. But when we look at the investment, we take a much broader perspective, not just into stock market, right? Because we have policyholders with our policies for the 20, 30 years, and we have to make sure our investment strategy matches with the nature of our business. So in terms of duration matching, we have to weigh in the different risks versus the return kind of profile of our investment. We need to look at regulators' requirements into what can be invested, what actually we should avoid. So we got different things to look at and to actually trying to balance out return versus risk, and also the duration of our return moving forward.
There's a lot of chatter in the market that perhaps the industry could lower the assumed rate of return on investment, given obviously the investment portfolios are down, and also, of course, there's still the higher liability costs. Yep. It could come down to about 3% is what the chatter is. It already moved down from 3.5 down to 3. Do you see that as a viable solution, if you will?
Well,
that assumed rate of return?
This is actually a great question, right? Because if you look at the interest rate in China, it's going down for a period of time. And moving forward, there could be a possibility that the low interest rate environment is going to be around for a number of years. Now, the regulator of the insurance industry has been taken very active measures to proactively manage what we call the potential risk for the investment return versus the cost of the liability mismatch, right? So that's actually we see a positive thing for the whole industry with the guidance of the regulator, trying to actually reduce the rates of some of our products. Actually gives us a healthy growth potential moving forward, not just the holding on a high quality of the liability, but trying to struggling with the investment return on the other hand.
Where do you see the next frontier, if you will, in the insurance industry here? We've been talking about catastrophic insurance as an opportunity. I mean, there's been a lot more climate change. There's been natural disasters. We're having flooding in parts of China now. Swiss Re is one international firm that has come in trying to look at the opportunities in catastrophic insurance. In the West, perhaps it hasn't given great returns because of the high costs associated and essentially the underpenetration here. Do you see that as an opportunity, catastrophic insurance?
Well, it is actually one of the areas we're looking into. But if you look at the broader picture of the whole Chinese economy and where the whole financial services, and particularly the insurance industry, is heading towards, actually we do see aging being a very important issue for the industry to address. Just some of the numbers I can share with you.
Sure.
If you look at the whole 1.4 billion population right now we have, for people aged over 60 and above, actually it's 20%, more than 20%. And 15 years from now, that 20% number is going to be doubled. So that ratio, if you look at that comparing to what's going on in some of the aging economy, like in Japan, in US, in Europe, it's actually quite high.
Yeah.
Now the challenge is most of the Chinese people are not really ready or very well prepared to deal with these aging issues. And that's something we believe as the insurance industry, we're able to actually help our customers to address. So we do see aging, how to deal with the aging issues and how to finance yourself in a longer life when people all want to live longer, but they also want to live healthier. So that's actually critical. So that's why one of in the recent changes, we have actually modified the whole group strategy from the integrated finance to medical health and also the senior care moving forward. So we got a dual prolonged strategy moving forward to address the retail customers' needs.